You were listening to chartingwealth.com for Friday, the 29th of July, 2016. Thank you for joining us. We're going to chart the markets on the 2-day chart and the 4-hour chart. See what we see on 4 different ETFs. We have one called IYY. You'll hear me refer to it interchangeably as IYY and the total market. We also will look at SPY, which is a Standard & Poor's 500, QQQ, which is the NASDAQ 100, and GLD, which tracks gold, actually the price of gold at a tenth of what it is on the spot market. A great way to follow what gold is up to. First, we're going to jump right into the total market. What do we see there? Crossed over going up back on the 11th of July, and since about the 15th, it has been sliding sideways. It was an up day, 0.23% for the market, but it continues to slide sideways. Now, there is more room for up movement. The Bollinger Bands are well above the market price, so it can continue to move up. We do, however, see some warning signs. Derivative oscillator has been losing speed since it topped on the 25th of July. And we're just in the first day of a 2-day candle that will close out on Friday. This is the first day, the 28th, so the market that closed on Thursday is the first day of the 2-day candle, and it has been losing energy. The MACD is moving toward the red signal line. Derivative oscillators losing energy, market sliding sideways, even though technically up for the day, 0.23%. What do we see on the 4-hour chart? Well, we see down movement in the morning on Thursday and up movement. In fact, a huge wick on top as far as up movement goes throughout the course of the afternoon. We do see the derivative oscillator losing energy. We don't have a crossover on the pullback yet. We're still in a negative. Can you believe that? It's because the market's slipping sideways for so long. Now, again, that's just where we are. We don't have a pullback because of the sideways slide. Remember, those of you who studied the MACD with us before, the MACD is not a good indicator when you have a lot of sideways slippage in price. So we are sort of paying attention to the derivative oscillator, and it's still in the negative. So we want to see a crossover going up before we'll have faith that there's going to be a lot of up movement. And the Bollinger Band also has come in sizably. It's amazing how narrow the Bollinger Band has gotten. The Bollinger Bands are volatility bands, is the best one-word definition for them. They represent volatility, and volatility has been decreasing as the distance between the Bollinger Bands has been decreasing. That shows you less volatility because the market's been slipping sideways since about the 15th. When you look at the 4-hour chart, you can really see it around the 20th and forward through the 28th as we go into the 29th. That's where we are on the total market. No ending of the pullback at this point. Next, we go to SPY, Standard & Poor's 500, an exchange-traded fund. It, too, is slipping sideways. It was up 0.12% for the day. Now, we have a negative, a red cross or a red doji, means lots of indecision. Do have more space for it to move up, a lot more space on the Bollinger Bands for the market to move down. Derivative oscillators losing steam. MACD's moving toward the signal line. Still moving up a little bit, as is the signal line, but again, looking very long in the tooth, even though technically up 0.12% for the day, the first day of the 2-day candle. What do we see going on as far as the 4-hour chart goes? Well, you can see we violated the last trend line that we could even try to draw on the S&P, and it has been violated now for about 2 days, and the market crossed over going down on the 19th, and we haven't had that pullback yet. Derivative oscillators losing some of its down energy, and it does look like the MACD's moving closer to the signal line for a potential up move, but no entry point at this point. All right, getting long in the tooth though. Let's take a look on the 2-day chart now at the Qs. QQQ up 0.36% for the day. That is a pretty good looking 2-day chart that we see. Continued up movement. We have not had a red candle. We've only had green up candles since the 1st of July on the Qs. If we go back to the 4-hour chart and take a look at it, we have seen entry point after entry point if indeed you are interested in using the Heikin Ashi candlesticks to make that decision. Some of you have been experimenting and trying with that. We're still well above the 2-day trend line. We did have a pullback around the 19th and then a crossover going back up, and then of course it crossed back down and is just now getting close to crossing again. All we want to see is an initial cross back, which was your entry point somewhere around the 20th. If you would have gotten in then, let's see what even what was the opening on the 20th? 112.17. The high was 113.60. Check it out. It's at 114.83. So in a worst case scenario, jumping in sometime that morning at the high of 13.50, you would be up well over $1 if you had gotten in somewhere around the opening at 112, over $2. Not bad if you follow the charts, is it? And again, the Qs has been the only one that's given us the ability to jump in. Any of those of you who are using the Heikin Ashi candlesticks to jump in, that served you well also. So again, these charts work when you're patient and you use them. I want you to be with us every day and train with us. Listen to what we're talking about. Pay attention. It is possible to make money on these charts. Now, again, we're not a stock calling service. We're talking about virtual trades. We want you to practice with us. Practice every day until you get good and confident. Then you can make up your own mind, your own decision with your own trading techniques. Hopefully some of those or all of those you might adopt from us. And then you make up your own mind. We are not a stock calling service. We don't get paid anything to provide this educational material to you every day the market's open. Now let's go to gold. What do we see? Well, gold broke its 2-day trend line. Actually, 2 days ago, we're still in a confirmed down move after gold crossed over on the 2-day candle ending on the 25th of July. And it actually has been moving up over the last 2-day candles. Again, the caveat is the candle that we have on our chart for the 28th of July is only the first day of a 2-day candle, but it is green, as is there is a green candle on the 27th, showing strong up movement, open green candles. So what does that mean? Well, gold technically was down for the day 0.29%. Remember, our Heikin Ashi candlesticks are measured in a different way. If you don't know what that is, you need to go to the website and check out our training on Heikin Ashi. You can also find that at the YouTube channel. Now, gold was down technically 0.29%. What is going on with gold? Well, it's in a confirmed down move right now. Let's check out what's going on the 4-hour chart. We see on the 4-hour chart, gold pulled back from that down move on the afternoon of the 27th. We had it go up 3 candles starting in the afternoon, or the morning of the 27th, up 3 candles ending at noon on the 28th, that is Thursday, and then down movement in the afternoon. So we have not finished the pullback. The market again on the big chart is going down. The pullback then on the short chart is going up. Once that ends, if gold rotates back over and starts heading down, then of course you can jump in it at that point. If you want to experiment around with it, of course, you've seen the pullback occur on candlesticks, and now it's crossed over going back down as far as the Heikin Ashi goes, although this is a red open box in the afternoon. The safest would be a red filled box, which means down movement. Red open boxes, as those of you who've taken our Heikin Ashi training know that typically means simply indecision. Still going up, not as strong as the open green candles, but a red open candle typically means indecision. If it leads to solid red candles, then that could be a crossover sign if you wanted to use the candlesticks for making that decision as far as an entry point goes. Not as safe at all as a crossover going back down where the blue MACD line crosses over the red signal line. That hasn't happened yet. Folks, that is where we ended up as we closed out the market on Thursday, the 28th of July, as we go into Friday, the 29th. We always appreciate you being with us. Thank all of you who have subscribed to the YouTube channel. You want to help us out. That's what we need you to do. We are getting closer and closer. We're almost at 800 subscribers. And when we get to 1,000, those subscribers are going to be privy to our proprietary broadcasts that we'll start bringing to you. Once we hit that magic number of 1,000, I know thousands download us every week and watch us, but those hardcore subscribers are going to be the ones that benefit when we hit that 1,000 mark. So please go there if you want to help us out. We don't charge you for anything we do. We ask for two favors. One is subscribe to the YouTube channel. Second is go to iTunes and subscribe to this podcast and give us a 5-star rating. Not too much to ask, is it? We come to you every day and provide all this material. We are happy to do so. Lots of good training at the Charting Wealth website. You can go there, sign up for our email. When you do, the benefits you receive are immediate. You start receiving this podcast in video format every day. In addition to that, you also receive the links to our How to Read a Stock Chart video. It's 15 minutes of must-have material to understand how these charts work and how to use what we do every day. Next, you'll also receive a link to a PDF that is our daily market worksheet that you can literally follow along with us and write down in your own hand what's going on, a little fill in the blank areas and all. Nothing is better for you to do than that. Yes, you can take notes on screen. You can do all the stuff digitally, but I'm telling you, there's something magical about writing stuff down and following along. It makes you pay attention and really puts it into your head. And then lastly, you also will get our layout, a link to the freestockcharts.com layout from Charting Wealth with the instructions on how to deploy it. So we so much appreciate you being with us. You have questions, problems, concerns, you can also email us right there from the Charting Wealth website. Let us hear from you. Let us know what else we can do to help you. We are here for you. God bless. Take care from chartingwealth.com.